Welcome back. You're watching Startup Street. Now, funding for startups in the month of August remains slow when compared to the beginning of this year, but slightly more than July, which saw the worst month for funding this year. Amid this slowdown in funding, my colleague Ritu Singh caught up with Piyush Surana from Tomorrow Capital and Sachin Tagra, the partner JSW Venture, on the sideline of TiE's India Internet Day to see if there was a light at the end of the tunnel and their investment plans. Take a look.
Rural agri and agri-based products and retail is something that's very interesting. I think we've already seen the first wave of e-commerce in urban areas, and we believe there's a lot of depth that will happen in the Bharat, as we call it, right? So that is an area that we are looking very closely at, and we're also looking at education, but with a twist, because we believe, I think, a lot of online education has already happened, right? But I think there's a great opportunity for omni-channel products, which can be a mix of both online and offline. So these are some areas.
Education is not really the flavor of the season. I mean,
but I think again, last year a lot of it was driven by FOMO, and people forgot some of the fundamentals, I believe. And I think that's going to change a little bit. I think obviously you can see already from the valuation multiples. I think there's some sort of reality creeping into valuation. If you look at it globally, I think education in India has always been a very it was one of the first waves of private equity investments in India. It's not going away anywhere. Obviously there'll be models which will be more suited for India, and we'll have to realize that.
What is the sort of opportunity you see in this crisis? I mean, will we just see the stronger players emerge? Will we see more consolidation among the weaker players, or what do you think we'll see at the end of this?
Really, two or three things, and you mentioned two of those yourself. So definitely there'll be a lot more realistic valuation when it comes to transactions, and I don't think that's necessarily a bad thing even for the founders. If you looked at it historically, I think we're starting to see historical lows in terms of how much founders own by the time they come to a Series A or B, because a lot of the fundraising has happened before. If you get to more realistic business models, you'll probably see founders owning a lot more of the company, more skin in the game. They own a lot more and stand to gain a lot more by the time the company does an IPO or gets to Series E or F. I think in most cases right now by Series B, founders are below 30%, which is quite low compared to historical numbers. And you'll definitely, I think there's a lot of opportunity as well for investors, because I think if valuations are more realistic, you have more conviction going in that this is something that will really work. So yes, I mean, like I said, there might be a funding winter per se, but I think it's a blip. We are too early in the ecosystem. We're tapering off, right? I think we've just started our journey as a country with lots of startups.
Is there going to be more focus on the path to profitability now?
And there should always be more focus on path to profitability, right? Like I said, last couple of years, maybe some of these fundamentals were getting forgotten in the FOMO of investing in the hot startups. But I think all the right noises from all the large players, right? If you look at any of the large edutech players or fintech players who raise a lot of money and who maybe even still have money in the bank, even they are talking about a path to profitability and sustainability.
How many startups are you currently evaluating? Would you be investing in?
So we maybe have about 2 or 3 startups that are very close to a term sheet stage. Typically, we invest anywhere between 5 to 10 mil first check. So you're talking about maybe a 30 mil to 40 mil investment over the next year. We've invested about a similar amount over the last 12 months, right? So some of that in our current portfolio companies to tide them over during this time, and also in a couple of new companies. So that's about what we are looking at. And like you said, there's been a blip in July, but I really do believe towards the end of the financial year and the first half of next year, we're going to be back to looking at some very interesting situations in the market where investments start picking up.
Opportunities come across the sectors. One needs to be keeping their ears and eyes on the ground. So we keep looking at opportunities in the SaaS space and in health tech, and as I mentioned, in consumer tech space. From deployment perspective, we are looking at a portfolio of about 6 to 8 more companies in the current fund. So we have done 6 till now. 6 more we will do from the current fund in next 1.5 to 2 years.
Any names you could share with us?
Of the future investments? Of course not.
Okay, let me quickly ask you about the, capital raising environment as well. Interest rates are on the rise. The global macroeconomic conditions are not the most suitable. The Federal Reserve is hiking rates, and there's a lot of investor money going out of emerging markets, going into the developed markets. In this scenario, how is it for you, the cost of funds? And secondly, even for startups in India, Is there a light at the end of the tunnel, this startup funding winter that they're seeing at the moment?
Sure. How VCs operate is we generally raise a capital for a fixed 8-year or 10-year duration. So in our fund 2, we have already raised capital and we are now in the commitment period or a deployment period. Now, there is enough liquidity in the Indian VC ecosystem to deploy for next few years. I don't think so there is a liquidity challenge at all with the VCs. We have commitments. Of course, we take drawdowns when we need to make investments. So that from that perspective, there is no challenge. But from a valuation perspective, of course, because of what we are seeing in the listed markets globally, it has impacted the valuations in the tech businesses, which of course we have seen impacts in India, but the impact is primarily in the late stage consumer startups or late stage startups, not in the early stage startups. Early stage startups are still at a reasonable valuations of what founders are expecting. We have seen these cycles. We have gone through the similar cycle in 2016. So I guess this is a phase. We will all have to go through this phase, but we will cross this phase.
But, our valuation expectations coming down significantly. I mean, 2021 was a record year for fundraising for startups. July has been a terrible month this year. The funding's down significantly compared to the previous year, compared to the last few months. What is the opportunity you see in this crisis? Because at the worst of it, we're seeing businesses shut down, we're seeing wide-scale layoffs, perhaps more consolidation?
It depends business to business, but yeah, late-stage startups which are in a very high cash burn mode and their business model is not yet fully figured out with the not so strong unit economics, of course they will face a challenge. But if you are on a strong foot of, strong unit economics, you are growing reasonably fast, you are addressing a large market, there is a product market fit, there is still enough capital to be deployed in those startups. So I don't see a challenge from that perspective. But yes, if you are on a high cash burn mode and, the scalability is a challenge or the growth is a challenge, of course, one will go through a bit of a pain. And in that pain, of course, some consolidation can happen.
Are you, any of the upcoming IPOs where JSW Ventures is an investor?
We can't disclose that because the startups are at a different stage of their growth journeys. But as the startups matures and they think the likely exit is IPO, of course they will go for an IPO.
Of course, that is the way for investors like you to exit. But lastly, between your Fund 1 and Fund 2, how much has been deployed and how much more will be deployed? If you could give us a figure, say by the end of the year.
Difficult to give absolute numbers, but Fund 1 was completely deployed in 2019, and now we are in the Fund 2 journey. Fund 2 journey, we have enough capital to be deployed for next 18 months or so. One can assume about 20-25 million we can still deploy in next 18 months or so.
It's Friday and it's time to take a look at all the action in the startup deal space. This week saw a total of 16 deals valued at $147 million as per Venture Intelligence. Some notable deals include genomics research startup MedGenome, which bagged $30 billion from Novo Holdings, Leapfrog and Sofina. Rural women-focused two-wheeler services platform Bike Bazaar raised over $21 million from Elevar Equity, Ferring Capital and Women's World Banking Asset Management. Cuckoo FM got $20 million from Fundamentum, Krafton, FBC Ventures and others.
And that's not all. HR tech company Kula bagged $12 million from the likes of Sequoia Capital India, SquarePeg and VH Capital. And finally, pro-tech company 4B Networks raised over $11 million from InfoEdge. Overall, according to Venture Intelligence, the startup world has seen 843 deals so far in 2022, valued at over $19,800 million. And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.